Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, we're back. It was good seeing you yesterday, and now we're back in digital form. How are you doing?
That's right. Live and in person in D.C. yesterday. And actually, I wish I could have stayed in D.C. to go to the crypto ball tonight. Huge event in our nation's capital with all the glitterati of the crypto world, but I had to give up my ticket. So
yeah. And we joked about that, Mark, right? Because before, there were no crypto balls. There were crypto back alleys and crypto basements. We have moved up to this table, the grown-up table, like you said, for Thanksgiving.
I mean, it really is amazing. And look, the fact that this is part of the inaugural weekend. So, I guess Sunday, there's a rally and the inaugural ball. And Saturday, there's a bunch of stuff. But now they said, all right, Friday, we're going to have the crypto ball. And David Sachs, the new czar, is hosting or co-hosting with Bitcoin Magazine. So lots of fun. My boys Dylan and Simon from Metaplanet are going to be there. So I'm kind of sad I'm not going to be there. But I had to be home to watch the sun because my wife is going to see her mom. All right, quick reveal. So it is a big day. It's Bitcoin Friday. So I do have the orange pants on. And I have the Bitcoin bull sock game because the bull market is back. We're back above 100,000. We're at 102,500 as we record on the eve of, the first Bitcoin president, self-proclaimed. But we'll see how this goes. I'm sure there's people saying, oh, buy the rumor, sell the news. I don't. So I think this guy is going to sign some executive orders. Now, whether they're as big as everybody wants, we'll see. But I think he's going to do some things that kind of open people's eyes. Yesterday was amazing. While we were having lunch with the great folks up in Fairfax, it was amazing. He declared that crypto. It's so funny because the Bitcoiners get so angry when he uses the word crypto, but whatever. So at least he's talking about, digital assets broadly, but he said that crypto should be a national priority.
Oh, wow.
I mean, that's a term of art. I mean, that's a big deal, right? I
mean, Mark, slightly going off script a little bit, there was an idea that I've been thinking about a lot as we're coming back from the holidays. This shift, this idea that sort of the native, I guess, let's call it the cypherpunks, going back to like the Genesis block. The idea that Bitcoin was supposed to be this way to shield yourself from government intervention. And so now, that idea will never be realized. And yet the technology could not have grown in such a way unless you completely live in a Mad Max kind of society where everybody's running around with the facial tattoos looking like middle linebackers. But I think that it's an interesting shift because we're always really clamoring, and I think Morgan Creek especially, we were a firm that invests with regulation first approaches. And in order to do that, you have to align yourself to a government interest or government sponsors like Cynthia Loomis, who now is kind of going after the destroyed documents. You saw this, Mark. So now that the kind of winds have changed, winds have blown change in, some of these documents are not trying to see the light of day. And not only they're being redacted, they're outright just getting destroyed. So, people are getting wind of this, and in particular, Senator Loomis, who's, the crypto queen, and she's calling out the powers that be here on the FDIC for allegedly destroying these documents on strongly worded letters, and I guess just making more of a stir about this. And I think it's very interesting because, why would somebody do that, Mark? I think they're kind of doing that to kind of establish a record, right? Trying to establish, okay, here is who is for this kind of policy, who is against it. And of course, there's always the idea here that, history remembers. And I think that's extremely important. And there couldn't be a more blockchain related thing, Mark, than having something that's immutable. I mean, what are your kind of initial thoughts when you kind of see this idea here that I'm thinking that maybe they're going to have a day in court for those that brought the others to court?
Look, I think you're exactly right, X. And, it's interesting. Incentives drive behaviors.
Mm-hmm.
And we talked about this. Again, when a technology threatens an industry, that industry will fight back because they're incented to. What's the famous line? When someone's livelihood depends on them not understanding a technology, they will not, right? It's just real. So all of that comes back to this issue of now we have the person at the top who then will fill in other people below that will be less anti. I'm not saying they're going to be fully pro. Some certainly will be, but even those people, many of them, not the appointees, but the elected ones, are going to have to raise money, and some of that money is going to come from incumbency. So I think this goes to the longer term question of, TradFi, CeFi, DeFi, which is TradFi, right? Is that a good 800-ish year run? Centralized banking and central banks and fractional reserve banking and all of the things that have come up from that tradition. And now we've got things like Coinbase and Kraken and places that are like, whoa, that's kind of the new age, is digital assets, but it's in a centralized form. And the government could come in and say, hey, give me all your customer records.
Mm-hmm.
Now, they could say no, but then, government could try to make their life miserable, like suing them, like the SEC did.
Right.
And so there's all of that that's going on. Well, then there's this DeFi thing over here, which I was like, well, we don't need that other stuff. We'll just do it all over here in this decentralized world, which people can't touch. And it's funny, I got tagged into a debate.
Oh no.
On this two guys going back and forth, and this one guy's just going on and on with all the usual FUD about, the government can seize Bitcoin. They seize lots of Bitcoin. Like, well, no, they didn't seize it in the sense that they didn't hack in and take it. Now, they said, okay, we're going to arrest this person and we're going to put this person in jail and we're going to make them give us their keys. And then we're going to seize it. Okay, so that is a seizure. But short of the threat of force and violence, it is unseizable. But they're going back and forth about this disproves the whole theory of Bitcoin being useful. Like, well, no, it's kind of like the exception proves the rule. If occasionally through the traditional system of threat of violence, you can take someone's stuff, right? Like in theory, I love this. It came out last week, maybe a week before, that the income tax is voluntary. Like this person actually testified to Congress that no, the income tax is voluntary. I don't feel that it's voluntary, X. I don't know about you, but I
was told, Mark, that, and this was back in my high school days, that there were two things that made you a good American. And one was paying your taxes and the other one was voting. And I'll say that I do both of those. I don't consider those voluntary. So I would agree.
Looks voluntary. Now, and they're like, well, you can not pay them. I'm like, well, but if you don't pay, you can literally go to jail, right? And first they take your stuff, right? They can, seize your income but that just doesn't feel voluntary to me. But
right, not a choice you would want anyway.
You would want it. So okay, fine. You can say it's a voluntary system, but if the threat of violence against your person is making you do something, that's a coercion. And yes, we would love to immediately go to a world where that can't happen, where I can have my money and you can have your money and we can freely exchange. That's peer to peer. That's the whole point of Bitcoin.
And in fact, Mark, the debtor's prison was one of the earliest prison systems in the colonial era, right? Which is established if you don't pay your debts and, a tax liability. I mean, it's there in the name.
Prison sounds like a bad place.
No, yeah.
Never been, thankfully, and don't want to go there. So long story, I think the issue here is we need these steps and we need this interactivity in the sense that I can't pay my mortgage, my taxes, my electric bill with digital assets yet. I think it's coming. And I think what form it's going to take, that's still to be determined. But ultimately, so I have to live in the fiat world. And so I have a bunch of digital assets that I feel are like off grid and are kind of, but I also have to do my daily transactions using my Visa card or whatever. So, and I love when, hardcore Bitcoiners get all on, everything else is a shitcoin. And like, do you have money in the bank? That's not the point. Like, just answer my question. Do you have money in the bank? Well, yeah. Okay. Well, then one, that's not your money, right? It's now the bank's money and I owe you. But unless you're 100% out of the fiat system, and I think there are some, a very few number of people that have done that, unless you can claim to be that person, don't piss on the incumbents, right? Because it's a system. We may not like certain elements of it, but it works really, really well. I get in this debate often on fractional reserve banking. Oh, it's the evilest thing ever. It's the downfall of banking. I'm like, name a country. That's my favorite line. Name a country that doesn't have a fractional reserve banking or a bad functioning one that you would move to.
Right.
I'll wait. There isn't one. It is what separates places you want to be from those that are still struggling to be, because there is an advantage, and we talk about this on many shows, there's an advantage to pooling resources, pooling assets, pooling risks, pooling, harvests, sharing resources, comparative advantage. All of that is good. And what's going on, look, I'm excited for the inauguration and for the new president to get rid of this mess that was created in kind of the party I lean to for most of my life. It just got messed up, and I'm not quite sure how. I kind of have some ideas, but I'm excited to get rid of that. I'm not super excited maybe about the person. I think, he's self-interested. Let's just put it that way. So,
well, to the point of Luminous, Mark, that kind of reminded me of something that was said by our old, I guess, comrade, the Mooch, right? But he wasn't the only one who said this, right? I think Ray Dalio has said this, where if
definitely not comrades, because like us are so far from the class ad socialist. They are definitely capitalist. So left. So if they call it.
If it meaning Bitcoin gets too big, well, then the government will just kill it, right? That's also something that Munger said to his dying days. Buffett has continued to parrot that. So the very headline with Loomis not letting Operation Choke Point 2.0 just fade into obscuria really tunes that's not going to happen.
How big is that number? 2 trillion with a T, trillion, right? So again, we sit here for 31,710 years and we spend $1 a second. That's one. So 2 of those babies is pretty amazing. And
right.
So how big is 2? Now, the reality is that not only are they not going to shut it down, and not only are they going to be against, they're actually now going to say, hey, we're going to embrace it. We're going to create a strategic Bitcoin reserve, and we're going to put some on our balance sheet because it really is digital gold. All of that is amazing. And so two other quick things, and then we'll talk about the news. So one, I keep flashing my GM, my good morning. And, that's the Bitcoin on the other side. And remember, this was a gift from my friend in the biz, a New York Fashion Week. So and since we're just at the end of New York Fashion Week, which is kind of, so his handle and what he does for a living is he comments on fashion. That's how he got started. But then he became a Bitcoiner, and then he created these really cool mugs. So if you want one, reach out to New York Fashion Week. And second is I'm wearing green. Now it's the wrong color green. I mean, it's kind of in between these two colors, and I'll be full on leprechaun on Monday. My Irish are playing in the National League game. And man, I think this is just going to be such an amazing event, an amazing game, but I am going full on leprechaun for that. And one funny story. So I wore the same outfit. So I had the green pants that people have seen. I usually wear them on Green Candle Day, so I probably should have worn them today. But then I have my green Notre Dame, and it's that, bright Kelly green. And so occasionally, not all the time, but occasionally, but not zero times, people say, hey, you're Dan Patrick.
The Michigan guy of all things.
I don't really see it, but whatever. In fact, the funniest one was I was walking across campus at a football game at Notre Dame. This guy comes running over and says, Mr. Patrick. No. He says, no, I know you don't want anybody to know. I know it's you. I know it's you. You just sign this. Like, no, I'm not him. He says, no, come on, just give me an autograph. I'm like, fine. So somewhere, some guy's got an autograph from me that says, Dale Redden signed Mark Yusko, signed Dan Patrick.
I love it.
The Orange Bowl. And the usher says, can I take a picture? I'm like, what? Sure.
All right.
And so she thought that I was Dan Patrick, right? But my wife said, no. She's just like, you look like an idiot in that, head to toe, Kelly green. I was like, yeah. But then as I was walking out, another guy said, you look just like Dan Patrick. I'm like, okay. So anyway, but it is a weekend, and Monday will be the day to wear green.
Yeah, I think so, Mark. And I think that also speaks to the point about consolidation always makes things better. I have not seen a better consolidation of Notre Dame talent since probably Lou Holtz era. So I think this is really kind of your time. And one of the things also that's been consolidating, Mark, is XRP. Have you seen this? Up 44% this week alone. And really, let's kind of dive into this, because just on yesterday was up 11% in that one day with this idea that it could be part of this reserve currency that kind of the president has been, or president-elect will be advocating for, along with several others. And, let's into the numbers here, right? So it's now on its way and then tracking towards a new all-time high with sort of these levels to watch. $5 as being a primary target, which is, unheard of if you've been following this. The stat that I thought was pretty nuts as well, and there's so many, is dating back to April 2021 was the last time that ETH holders have outperformed XRP, right? So let that sink in. That is a pretty long time ago. And really, the open interest has reached an all-time high as well, 8.4 billion. And liquidations are actually pretty low in the last 24 hours. That's was the zillion.
This is a funny one, and there are some people who are really mad at me. So I occasionally go on this other show. In fact, I'm going to record something for them later today. That is a bunch of the XRP army. And, I grudgingly said I would go on their show a couple of years ago. Because look, full stop, not a believer. And this pisses people off when I say this. And I'm starting to look, I don't know, maybe a little foolish given how big this thing has become, in that, look, this was the classic pump and dump ICO. And I made everyone really, really angry because I say,
oh yeah, that'll ruffle some feathers.
Darling House is kind of, I did use the word, and I probably shouldn't have, but I said, because it's kind of like running a scam. I mean, You issue a bunch of tokens, you put them in this foundation that you control, and then you just, whenever you want to make some money, you feed the ducks and people buy it. And, when it was fractions of a penny, whatever, people were speculating, and it was like, you had all these influencers, and you had the hot girls who were touting it. And, I mean, it was the whole ICO. It was the worst of all of the ICOs. And then it went all the way up to $3, and then it crashed, right? And it did the perfect Eiffel Tower pattern. And I was like, okay, see, there's no there. There's no development. And, Brad and the guys would say, oh, well, we've got these banks that are going to use it. I'm like, well, but have they actually used it? I mean, they say they're going to, and they paid Ripple, the entity, some fee, some consulting fee. But my issue is it's the wrong way, right? It's the wrong direction. So if you got TradFi, CFi, DeFi, Bitcoin and everything else trying to go this way, and XRP kind of goes this way, I'm like, well, what do you mean by that? Well, it basically said, well, we're going to replace Swift. Well, okay, but Swift is this antiquated technology literally that uses fax machines that the banks use and the BIS is in control of, and you want to just replace that with some faster technology? I'm like, then we'd have the same problem. The banks would still be in charge. And like, well, but that doesn't do anything. And in fact, how are people going to share? Because the banks aren't going to pay the holders of XRP. And that's another problem is XRP is literally kind of like Doge. I mean, there's no there. You don't get a share of profits. You don't get cash flow. But you have this big foundation that still owns the vast majority of it and not very much trades. And so the price can move. But then this is the silly thing, right? Is this the way market cap works? Is you take the last 100 XRP that trade, whatever that price is, and you multiply that by the billions, which they can create more anytime they want, which is another problem. That is crazy because if the foundation sold 5% of what they own, what would happen to the price? We'd go down 95, 98, 99%. Right? So it is a conundrum because the market, now people are saying, well, the market cap is bigger than JP Morgan. Like, but what revenues do you generate? What profits do you generate? Bupkis. So they just announced yesterday that, they five banks in Africa have pledged to use it. I'm like, well, okay, pledge is something, but are they actually using, or is any, and they're like, well, we started a stable coin. I'm like, well, okay, there are a lot of stable coins. Circle's way bigger and Tether's way bigger, but okay, you got a stable coin. But the real thing you pointed out is Eric Trump owns some. And I don't think he owns a lot, but he owns some. And he's been public about it. And so, Garlinghouse, and I don't remember the other guy's name, but they got invited to Mar-a-Lago and they took a picture with Donald. And so, but the funny thing about this, right, is they take the picture and they post it and it goes from like 250 to 3 something and everybody's like, oh my gosh. And Eric, not Donald, but Eric says, hey, we think maybe this should be part of the strategic reserve, not just Bitcoin. That's not what Lummis is saying, but that's what Eric said. And I think it was Eric too, said, maybe we should make US-based tokens tax exempt. Now they attributed it to Donald, but I think it was Eric who said, well, and it was XRP and Hedera and Cardano. Hoskinson and Garlinghouse were massive donors to politics, except this was the funny one. I think it was yesterday. Donald says, you made a bunch of money yesterday, on saying you were going to be part of this. But hey, where were you when I needed you? You were giving money to Kamala. not me. And he actually used the F-bomb. Donald dropped an F-bomb against Garlinghouse. So now it'll be interesting. Will Garlinghouse be at the crypto ball tonight? He probably will be. And will it be frosty or will it be lovey-dovey? I think that'll determine a lot. But I don't know. I still cling to this, right? That we've been doing this a long time, 7 years, investing in startups. Not once, ever, have I ever met anyone building a project on Cardano. No. And, the Cardano people say, hey, I got lots of projects. Show them to us. I mean, I've never met one. No one's ever come to us looking for money. And I said, I've actually never met anyone who's building something on XRP, but I have to stand corrected in that we do have a portfolio company, Stably, that helped them build their stablecoin. So
that's right. Using their rails. Yeah.
Yeah. So they didn't seek out XRP. I think it went the other way. And they
exactly
to them and said, hey,
right,
build the stablecoin. So I still think I'm right in saying I've never met anyone who's intentionally picked XRP to build a project.
Yep. So what could be coming too, Mark? What could be coming is that we're kind of on this eve here. Well, we've just surpassed the 1 year anniversary. If you can believe it, we should have had a little banner or something for the ETF approval, which was last January. And so, in that time, the numbers were pretty astounding as far as, how big things have grown. And, what you can expect now into the future is, more of the same, more ETFs looking to come to market. And what it could remind me of too, Mark, is, that old stock tip where there was always a lot of activity and movement in companies that were just outside the Fortune 500 because those were the next to move when everybody sort of has passive investment into the ETFs. So that may be also happening with something like an XRP or some others like Solana, although Solana has a lot more utility and investor community. But I think that there's a little bit of this trend following as far as, who's going to be next in this cohort, because, when you see the flows for the ETFs, 110 billion in AUM for all the BTC ETFs. Ethereum is a little bit behind. They were only 11 billion, which is still a massive number. But if you're seeing that, and if you're active in this market, you're going to say, hey, I'm going to take a flyer on this kind of activity. Plus, states already lining up for strategic reserves. So we've had a couple already in the news that have kind of declared themselves as next in line. States like Texas, Ohio, Pennsylvania sound familiar. Those are all red states, not to get too political. But then also you've got New Hampshire and North Dakota. So there's a little bit of blue in there, although mostly folks that are aligning themselves with a pro-crypto agenda, which is now, firmly entrenched within the RNC. That's been something that helped folks get to the polls. So it could also be driven by this sort of trend strategy. But I guess, moving on, Mark, to one point that I wanted to sort of squeeze into, which is idea that we touched on last week on the AI side, and how what we're seeing here is a new direction in terms of the embrace or lack thereof of tech and the executive branch. So kind of in 2016, there was a little bit of an antagonistic relationship between big tech and the executive branch. Sort of under the current administration, it's been a little bit more favorable, although it's been mixed depending upon kind of the current agenda. One thing that has been sort of a tug of war has been the U.S. relationship with China, which we have, documented a lot on the show in terms of what that means from a tech and investment standpoint. And so a new executive order was just made to secure AI data centers. So President Joe Biden's last executive order, and I think these are always significant to kind of look at the legacies of presidents as they leave lame duck sessions. And so this is really focused on having, more fast track of land development for gigawatt scale facilities for AI use, which is really good, restoring U.S. competition. And then this also kind of comes at the heels of the same administration announcing restrictions on exporting advanced AI chips to different sovereign nations, right? So you see this interplay that's happening. And maybe that's one thing that both parties could agree with, is that a stronger U.S. is a good thing. And the challenge and where the rub is for the public sector, I guess, for business, is that these are big markets for them. So if you're a Facebook and if you're a Google, you want to have a strong relationship with China because that is where a lot of your customers are, right? And so, where is the rub? And I think I've already started to see this, and I love, just like yourself, a really good conspiracy. So I have to think there's a little bit of a quid pro quo here between Facebook's recent declaration of removing some of their monitoring on their sites and maybe to curry some favorability with opening up new markets. Mark, what say you on some of these AI tips that are now up about national security, but also, in fact, free enterprise?
Look, so many really important points. I mean, the idea that data centers and semiconductors suddenly became important is so funny, right? I mean, this chip war, and we've talked about this,
Yeah.
has been going on for a decade in China. And everybody's like, oh, but they're getting their asses kicked. I'm like, well, really? Anyone know about SMIC? Okay. Which is, China has very quietly built up massive capacity in semiconductors in mainland China, exporting, shall we say, technology from Taiwan and the U.S. And so now all of a sudden, reactionarily, we say, oh, we're going to stop sending you our chips. Okay, but here's the problem. 30 years ago, no question, 40 to 30 years ago, no question, China didn't have technological expertise, and they still have a big poverty problem, and they didn't have a very good education system, and all kinds of challenges. And we were generating all the new tech. And yeah, they stole it, right? I mean, down to the bugs, right? There's the stories of the routers that they borrowed from Cisco, and they copied them, and even the bugs were copied. Well, now, after 30 years of graduating 5 million STEM engineers per year, 500,000 in the United States, 5 million. Actually, I'm rounding. It's 4.5 million in China. And, 90 some odd % of the AI citations and all this stuff and patents, number one in patents, all of this is they realized, and I still cling to this construct, that for the better part of 800 years, what secured that banking power was naval superiority, right? And it goes from Portugal to Spain to Netherlands. I mean, it goes on and on and on. And we have that. And everybody says, well, they don't even have, they have one aircraft carrier and they keep crashing their planes. This is Kevin O'Leary saying. They keep crashing their planes into the side. I'm like, yeah, they don't really care because the next war and the next superiority for being the world reserve currency be fought with chips, not ships. And if you look at hacks and you look at, like, someone just hacked Janet Yellen's computer yesterday.
Oh, boy.
Guy walls TikTok. Whether you like her or not, it's not the point. I mean, she, in theory, should have the most secure or one of the most secure accounts in the world, right?
Definitely.
And she got hacked. So, and they spoofed JPOW last year, right? And so there's some smart people around the world. They don't all live in the United States, American exceptionalism. But I do think that this back and forth, and I'm not a protectionist guy. I think protectionism is dumb. I think it's like Europe saying, well, we're not going to let any Chinese EVs come in. Really, you want to think about that for a second? Because where does Germany sell all their cars? China. So you do that, tit for tat. They say, you know what? No more Volkswagens. And what happens to Volkswagen and Porsche? And now Germany is in recession. So they thought they were all tough and mighty. Now Germany and France are in recession. Well, I love this. This is getting it yesterday. China. Do you remember when a few years ago, right after global financial crisis, there was this cover story in The Economist, and it showed Africa with a Chinese flag over it, draped over it. And, they had lent all this money to all these people all over Africa, all these countries, and they couldn't pay back the loans. And what'd they do? They didn't rough them up. They didn't break their kneecaps. They just said, you know what? I'll take that port, and I'll take that mine, and I'll take that port, and I'll take that mine. So they ended up owning all the assets. They just said, Volkswagen, we know you're really struggling. How about we just buy those production plants? So they think long-term strategically. And I think by us saying, we aren't going to send you our best chips. Okay, but we already did, and they already have the tech. So that's like closing the door after the horse is already gone. Okay, and that's typical of this current administration, is they're reactionary, not proactive, and not big thinkers. But the real problem is tit for tat. And I talked about this. We did my 10 surprises. I did this 2 days ago. And one of them was, everybody's saying Kyle Bass, who is a friend actually, is saying, China's imploding and they're, interest rates are falling. I'm like, let's think about this for a second. So what's happening in the U.S.? Our interest rates are rising. Well, why is that? Well, because China, which is the largest owner of our debt, not only stopped buying, but actually started selling. Okay? So we have all this debt, right? This 36 trillion and growing, and we have to issue new bonds. And they used to go to China and Japan, and now China said, no more. And in fact, we're going to sell what we got. So our rates, so they cut interest rates, the Fed cut rates, and for the first time in history, this is crazy, not first time in 10 years or 20, first time in history, the Fed cut rates and the 10-year went up an equivalent amount. So it's like, whoa, if our rates go up and we have to refinance all that debt, isn't that bad for us? Yeah. And so what do they do with that money that they're getting from selling the bonds? They're buying their own bonds. Well, if they're buying their own bonds, well, when you have massive demand for bonds, what happens to the price? The price goes up and the yield goes down. So, and what that does is by them buying all their bonds, well, who else was buying all the bonds? Japan, Europe, US. Well, they were buying all the bonds. Why? To stimulate their economies. Because you buy the bonds from the banks, you put the money in the banks, and they recapitalize the banks, and then the banks lend to the SMEs. So China is reliquefying. You're putting massive stimulus. Now, the long term, this will be good for everybody, but it's so interesting to watch the protectionist reactionary moves when you're like, well, no, globalization is good. Comparative, look, Adam Smith, mad genius 500 years ago or 480 years ago, whatever it was, comparative advantage is how the world gets better. And anyway, so that's what
that reminds me too, Mark, and maybe not to rabbit hole too much, but we love talking China. And I think it's just a fascinating place for many reasons. But the idea that, you could just kind of cut somebody off, right? Where China has a one with a T, Mark, a $1 trillion head start in any tariff fight because of the trade surplus, which is this huge thing. Because if you kind of really peel back the numbers, and I would tempted to make this a chart of the week, maybe we'll do it another point. But basically, the notion that sort of manufacturing in China is dead couldn't be farther from the truth. It is as robust.
It's a silly concept. And look, the Donald is a great negotiator. There is no question he's a great negotiator, right? And you can call him all you want, but the man gets stuff done. He gets stuff done, and he's resilient, right? And one of the things, and I talk about this a lot actually, is everybody says, boy, he's gone bankrupt and his casino failed. Like, guys, failure is how you get better, because you learn from failure. And then if you're resilient, and the great line is, most great people have failed, more than the average person has tried. Because the average person is so afraid of failing that they don't try. And there are lots of examples in your life where that's true, whether it's a new career or a new girlfriend or whatever. Lots of examples. And the Donald tries. And so, but the other person who's a really good negotiator is she. And as great as the Donald is, she one-upped him, right? He got elected a third time, which was not supposed to happen. Now everybody worries that the Donald's going to do that. But he got elected the third time. And this is my favorite part, there's a 7-member standing committee of the Politburo. And you have to be under age 65 to be president. Okay. So, and the president has to come from that 7 members. So it's kind of like you get to the top and then they pick from those 7. He stacked the 7 with 7 people who were over 65.
Wow. So
no one on that group could replace him. So it's like, well, I guess I'll just stay. And, Putin did the same thing, not the same thing, but a similar thing. And so there are these, so what we've got now is a match between master negotiators, master strategic thinkers. And, it's the old, America was playing checkers, arguing about how to set up checkerboard. And, Russia was playing chess, because he's a grandmaster, right? And China was playing Go. And the interesting thing about Go is chess and checkers are confrontational sports, right? I don't call them sports, but games. And it's all about the key squares in the middle, which is interesting. That Scott Bessent, who is our new Treasury Secretary, that was the name of his firm, Key Square, because it's all about those 4 squares in the middle. But Go is not a confrontational game. It's a relative strategic game, relative advantage game. And so it's a very different, it's harder. And that's why it took, AI longer to break Go than checkers and chess. But anyway, I just think there's a lot going on the world stage. And the thing I do admire about the incoming administration, it's the greatest collection of talent we've probably ever seen. Now, there's probably some times back in the 1800s where comparatively the brain power was equivalent. And I just don't know those people and I haven't done enough history. But compared to the time I've been alive, 61 years, no administration is close. Yeah. And maybe Kennedy's was close, but no administration in the last 30 years is close to what
one point to kind of conclude before we roll into the chart of the week. So in just some of the China stats, they surpassed in 23 Japan to become the world's largest exporter of cars, right? And basically they control around 30% of global electronic exports globally, 22% of machines exports, and 80% of solar power modules, right? So the idea that you can just sort of turn off the spigot, especially in the EU, when since 2018, that surplus was 250 billion. So we're talking about, 4x.
And the EU one is the craziest one because what is the EU? It's Germany, right? With a bunch of other quote unquote crappy currencies linked together. Well, why would you put crappy currencies with the Deutsche Mark, the mighty Deutsche Mark? Well, because if you're a mercantilist, if your job is to export, you don't want a strong currency. You want a weak currency. So back to China, what's happening to the renminbi? It's collapsing at a rate where it's below where Donald called them currency manipulators last time and forced him to raise it back up. So Germany sells cars and machine tools to the rest of the world. That's what they do. And they're really good at it. But if their currency gets super strong, it wipes it out. And so Ms. Lagarde raised rates and the currency got strong and they stopped winning. And particularly, then they slapped the tariffs on China and China's like, you know what? Be gone. We will deal with other people, which they have done really, really well. At your point, $2 trillion. So I just think trying to be nationalistic and protectionist has never worked out, right?
Right.
Look at
You can't do the two things, right, Mark? You can't grow your economy based on globalization and then expect your economy to continue growing by reversing course, right? And so I think that is a nice time to kind of transition as we look at, the start of this new year. I love to re-examine our asset class. That I think it's the best one. It's the where I kind of hang my hat, where you hang your hat, and kind of looking at some things that we have said for a long time about kind of the ongoing performance of venture capital as an asset class. And that's why, our listeners love the show, because we're able to not only look at venture, but we're able to zoom out and think about how all of these other macro conditions are affecting, our little sphere here. So I will kind of share my screen. I have a twofer today, Mark, for our chart of the week. That will kind of tell a story. And for those that are on audio only, we remind you every week, please check us out on YouTube so you can see amazing things like the Bitcoin game reveal from Mt. Sox, as well as our chart of the week. And so here, for those that are on audio only, Mark, we've got a 10-year rolling average. This is from our friends at Hamilton Lane. And this is showing, from dating back from 2017 and kind of where we look at now, a couple of different slices where you've got buyout, growth equity, venture capital, and MSCI World Index. And you're going to see some things here that shouldn't be too surprising to you, Mark, about kind of who is at the top and who is at the bottom. Now, I wish this would mirror total asset size allocation, but it does not. It does not. So this is kind of the 10-year. And for those that are on audio, what we're seeing here is all of these have some peaks and valleys over the last several years, with sort of the 21 era on the venture side. Well, it was really, as well as really everything in 21, 22 started peaking a little bit, and then it's kind of been in this decline. And so the narrative really becomes, Mark, and we've seen in the rooms as we try to raise capital or have conversations about our industry, well, I'm just not sure about my venture allocation. And then you see a chart like this, which really zooms out. And this is just 10 years. You extend this to 40 years, it's not even close, where you kind of see some of this performance. Mark, I'll let you comment on this one. And then I've got another one, which actually puts it into nominal pictures if you invest the dollar over the same kind of course.
Yeah, look, I mean, the way to think about this is the simplest form of how investing works. In investing, there are 4 risks that you can take. And if you don't take any of them, you don't make any money. So at the bottom of this chart, which doesn't exist, but imagine drawing a line, at the zero line, basically zero real return. That's if you left your money in cash, right? You'd make on average about 4%, but inflation has averaged about 4%. So you make zero real return. So even if that line was at the 4%, that's a fraction, a third of what you get in equities up at 11%. So this first risk you can take is credit risk. You can buy a bond, and bonds might not pay you back. So you make 2% above risk-free. So you make 6%, about half as much as equities. Well, equities make another 5%. So 7% above risk-free. That's that 11%. And they compound at that forever. So the third risk you can take is illiquidity risk, meaning private equity, private real estate, private energy, private debt. And you make another 500 basis points. So you make the same increment above equities as you do equities above debt for taking illiquidity risk. And that doesn't include the benefit in venture capital of the innovation premium, which is really not part of this, but it's a bonus in the sense that you're actually creating new technology and new value. It's the only way, actually, you do. And then the fourth way to make money is leverage. And that's where you see the LBOs can at times do really well, because there are times when levering something up increases your return. There are other times where it hurts you, but usually around financial crises. But the bottom line is this is absolutely written in stone. And this idea that somehow it's not going to be true in the future, so therefore I'm afraid of it because I think I missed it, misses the whole point, which is you can either take credit risk, equity risk, illiquidity risk, or use leverage, or you can invest in innovation as an asset class, right? Which if you look at all the best investors in the world, all of them, the reason they outperform is they have an overweight to innovation as an asset class. Venture capital, direct investing, or they run concentrated businesses that are creating new stuff. And that is so logical. If you think about, I'm a biology guy. I'm a chemistry guy. So when you think about biological systems, that's how it works, right? Life is created by innovation or the combination of new A, T, C, and G. But once it's in stasis or once it's in steady state, then get things like chemistry with the rate limiting factor. Like if you want to make NaCl, you need a certain amount of Na and a certain amount of Cl. If you don't have enough of one, then, it doesn't happen. So these are fast and hard rules that, people should take advantage of.
And then that's a great transition in terms of the venture capital growth of $1, because some folks are not as good with percentages. So let's talk about it as a whole dollar. And you're looking at this based on the stage of investment. And then of course, I love the comparison to the Russell 3000, which is an index to show how some stocks are performing. So if you look at the early seed stage, Mark, that is, if you invested $1 back in that same period, it would be worth $3.48 today. And this is as of September, so it could change a little bit. Q4 actually saw a lot of investment from VCs in particular into our industry. If you kind of had this balance stage approach, which I thought was actually kind of interesting, Mark. That's probably one of the big surprises here. You're not performing as well. But you're still up. You're $2.45, and late stage, which tends to have this idea that you're reducing your risk, therefore you're reducing your rate of return. That is true, but not so much in this chart where you have $3.14. I would love to see some of the companies that are part of some of the stages so we can get even more into the weeds. And then of course, at towards the bottom is our stocks, right? So Russell 3000 at $2.50.
Yeah, and it's the way it's nice when the math corroborates the story, and math is math, right? This is one of the things I love about our business, right? Is there are a lot of variables, and there are a lot of things that you can't predict, and there's human elements, like humans control interest rates instead of having an open free market, which they should, but there are certain things you can't predict. But when all is said and done, it's just math. And if you compound at a certain number and you multiply that number over and over again, you'll get an increasingly large amount of wealth. And if you minimize your volatility while doing that, you'll get even more wealth. And so and that's what Markowitz won his Nobel Prize for, which is just magic, which is say, wait a minute, I can take an asset that has low risk and I can add another asset that has higher risk, but the risk of my portfolio goes down? I mean, the mind gets blown. And it's because of lack of correlation, and that not everything zigs when the other zags, and not everything is inextricably linked, because you can invest in energy, which is different than technology, which is different than, whatever. And I love this year. If you would have asked anyone in December, what should you invest in? Energy and commodities or tech? Oh, definitely tech. Energy's dead. Haven't you done global climate change? And guess what's winning year to date? Energy and commodities. So it doesn't mean they'll win for the year, but at the end of the day, there's a math problem, which is how much do you value something based on a discount rate? And yeah, humans are going to human, and we're going to push certain things to certain crazy levels. And then we've got the silliness of market cap weighting and passive indices and all that other stuff. But ultimately, math wins. And which is actually bring it all back to Bitcoin, which is what I love, about Bitcoin right now, is the math of adoption, limited supply, and the growth of the network says that, and if the SBR gets approved, that changes that math problem in a really interesting way. And, the ETF flows that you mentioned, 110 billion, that is this awesome. Part of the problem with that, though, is if you've seen the CME chart, which would be the third chart of the week, it's straight up.
Mm-hmm.
Like, oh, look, that's further adoption. I'm like, well, not so much. Most of that's short. Because what's happening is, Millennium takes a $2 billion position in the ETF, but then goes short $2 billion. So they're net neutral and they compound. So they make like the 10, 11% spread between the futures price and the spot price. It's called roll yield. And then they lever that up a bunch and they can make really nice returns as a hedge fund. You saw hedge funds that did that, made a lot of money last year. But so a bunch of that money that's sitting in the ETF isn't net new money in terms of demand for price or price demand, meaning that that's going to impact the price because you've got an equal amount shorting these paper Bitcoin, which that's, again, story for another day. But any market where you can create something out of thin air, commodity markets, etc., which is why they designated Bitcoin a commodity. So don't be fooled for a second that wasn't intentional. So they could create this futures market. So as Leo Melamed, the head of the CME, said, we'll tame Bitcoin. Now, the good news is they won't because of math and an adoption and usage. But in the short run, they can manipulate the price if they want to.
Yeah, no, well, great point to end on, as well as we kind of look at this as a way to take a little bit of a broader perspective. We're in a new year. I know people we're so into this new year already, Mark, that we have surpassed the National Quit Day, which was earlier this week. So if you started a New Year's resolution, I know I'm very big into it. I think you are as well. Sort of figure out your intentionality for the year. Many people have already quit. So I think, looking at these sorts of views and slices of the market is a reminder that you shouldn't do that, right? Because if you kind of look at that drop from 21 to 22, it's pretty steep, right? In really all asset classes. But then there is this kind of steadying effect. And then if you kind of see what the broader trends are, it's not about what you put in, but about what you get out. So if you're kind of committed to a strategy, time and market.
18 days is a habit.
Yep.
So, if you can just commit to 18 days, so you'll laugh. When I picked up the guitar,
yeah, how's it going?
It's going okay. But so Stacy gave me actual lessons for Christmas. So I did go be with a human. I've been doing it online, which has been great. But as you might expect, I didn't really like the finger exercises.
Oh, you're tough.
Right? And so I just didn't do them. And so the first thing the guy says when I sat down with him on Tuesday was, all right, let's do Caterpillar. Yeah. So I am 3 days in to doing Caterpillar every night. But man, when I watched this guy play the guitar, I'm like, yeah, I want to be that. I mean, it was magical. And I'm like, there's no way my fingers are ever going to do that, but they will. But it's muscle memory and it's commitment, and so, but my Wonderwall and my I did learn the bar song, which is kind of fun. So
excellent. The power of shame, Mark, is really the subtext to digital currents. Showing up every Tuesday and having to perform. I mean, my old guitar teacher used to say, I could tell if you practiced within the first 5 minutes. And that would always lay the gauntlet because I wanted to make sure I was moving along. And markets respond in much the same way. The power of shame and missing out. That's why the short and futures market exists. But we'll end it on that note, Mark, and remind our listeners, as always, to rate, review, and subscribe. Fantastic engagement last year. Expect more of the same this year. And as always, stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.